Good morning, Paul Georgie from Allendale. It's September 6th, Thursday morning, and first of all, we will not be getting the weekly export sales today. That'll be pushed off to tomorrow because of the Labor Day holiday. A couple of the key facts that trade's looking at here this morning is the Ukraine Ag Minister said overnight that they will meet in October to discuss limiting the exports of grains out of the Ukraine. So that has got the wheat market excited here this morning, and also provided some strength to the corn trade. The soybean market is under a bit of pressure here on profit taking, mainly in the nearby contracts. The long-awaited ECB chairman Mario Draghi's speech should be around 7:30 this morning is when he is expected to speak, and that it may be old news, but the leak out of the ECB over the last few days has suggested that he will announce that they will continue to do anything to hold the euro together, and will also continue to buy bonds and support the cash flow in the EU that way. So that has provided some strength to the euro, some weakness to the dollar here this morning. Rain continues to be, well, actually has turned around to be bullish factors to the grain markets here because of the poor quality of corn that we've got throughout the Midwest because of drought. The rain has caused additional problems. We're hearing producers tell us here in the last 24 hours that they're finding a lot of sprouting in the corn ears that have been hurt by the drought, causing more quality problems. We've also already heard of aflatoxin and various mold problems in corn. Continue to be a headache in dealing with this drought-stricken corn, and that will continue as we go into and go through harvest here in the U.S. The bullish factor in weather out of South America, the talk of dryness out of Brazil and Argentina, a bit early to be concerned about it, but we know that weather will continue to be a problem and a focus of the trade as we move forward, because we're looking at South America to relieve some of the shortages that we've got in corn and soybeans here when we look at the balance sheets. And you talk about balance sheets, the several FCMs came out with some estimates yesterday afternoon. It appears like the attitude is that they're starting to feel that the rain has improved the soybean crop. We've seen R.J. O'Brien and F.C. Stone come out with some numbers. F.C. Stone is one that put the soybean crop above the USDA's estimate here from the August report. So we're going to see more of that here in the next several days. We do have the USDA report out on Wednesday of next week, 7:30 in the morning. Going to be focusing on that as we go into the weekend and early next week. Chart support is probably the key focus here today and will be into the weekend. The December corn contract has got technical support at 786.5. That's a number that's being thrown around a lot in the trade. You've got to assume that there will be some extensive sell stops below that price if we push through there anytime in the next couple days. The December wheat contracts got supported around 858, and the November soybeans, their technical support level is $17 or $16.95, right in that area. So those are key numbers to watch as we go forward here. In the livestock complex, cattle trade quiet, hog trade quiet overnight in the futures. The tight supply of fed cattle continue to support higher cash prices, and trade's looking for steady to firm in cash this week as well. We haven't seen any trade yet, but expect some firmer prices there. Cutout values continue to bounce and show some firmness in the beef. We had choice up 69, select up 114 yesterday. The pork complex, however, not the same. They have gotten beat up here in the futures and in the product and in the cash market. The cash hogs weak. The product down $2.57 yesterday, and the futures were down sharply yesterday, and continuing this downtrend in the hog futures as we're not getting any support at all from the cash, and the cash seemed to be under pressure because of liquidation. There's continuing large percentage increase on a weekly basis of hog slaughter. We're here in South slaughter also continuing. The high grain prices has got pork producers liquidating here ahead of time, where when you use the inputs and the cost of the hogs, by the time we get into December, there could be as much as a $50 a head loss in hogs, and that certainly is not creating any incentive to keep these sows and raise hogs at this time. So expect, however, that we could see some bottoming here in the product in the next week or so, and will hopefully give us some improvement as we move into October. So if you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We'd be happy to discuss any issues that you might have and any strategies that you might have going forward here into the fall. And we wish everybody to have a very successful trading day, and we'll talk to you tomorrow morning. Thank you.